Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar, a second bullish white soldier on Friday after the previous session's combined bullish piercing line pattern and bullish opening white Maribosa. The top side was capped again by the combination of bright red upper time, currently at 107.21, of the late December 2023 to early March 2024 bearish shift pitchfork, as well as the April 2020 low at 107.25. Further up, most of the moving averages are still in the tight band between 107.67 to 107.92. Below, we still have the support in the 106.68 to 106.66 zone, but prices avoided reaching down to it. Overall, the market is still outside and below the mid-April to late June ascending expanding wedge pattern. This ascending wedge pattern is quite interesting as it attempted to be a transition pattern for a move up and out of the bright red bearish shift pitchfork, but ended up getting sucked back into the main pattern instead. Admittedly, the downside primary target for a break lower out of this wedge pattern, well, that was already been achieved, and it leaves a much harder secondary target X below at 106 even. So far today, a gapping open higher over the bright red upper time and the April 2020 low, with prices rising to test the May 2020 low at 107.66 and that tight overhead band formed from most of the moving averages. The gap right now is actually still open. Cable, aka sterling against the US dollar. An indecisive doji cross on Friday as the market got itself stuck on a closing basis among the mauve highlighted flatlining medium moving average, that's amongst that at 126.41, and the rising green highlighted short medium moving average currently at 126.33. Now these two are part of a wide congestion zone between about 125.69 up to 126.72, possibly as high as 126.99, and they consist of the slowly rising long moving average, currently 125.69, the 50% Fibonacci line of the July to October 2023 move at 125.90, the green highlighted and slowly rising short medium moving average, the mauve highlighted flatlining medium moving average, congestion at 126.72, and the 50% Fibonacci line of the June 2016 to September 22 move, plus the September 2020 low, both at 126.99. Now overall, late 3 weeks ago, prices broke down and out from the dark blue highlighted April to early June bull channel, which morphed into an ascending wedge pattern, thus giving a primary target X is in the 125.65 zone, with a secondary hard to reach target X1 down in a 121.80 zone. So far today, a somewhat reactionary move back up, what looks right now like a bullish opening white Maribosa. Over the top side was so far been capped by the combination at 126.99 and the presence overhead of the breach, but still active bright red highlighted July 2021 to date downtrend, that's currently at 127.30. Euro sterling. A higher but still indecisive spinning top on Friday, though it was also a third bullish white soldier as well. The market penetrated the April 2021 low at 84.70, which had been capping the market in recent times, though this time the prices closed just over it. Overall, the last 2 to 3 weeks have been a reactionary move back up, from the market reaching its potential down at 84.30 from a May to June based bearish halfway hesitation. What the market is now forming is an unhighlighted rising wedge pattern that's currently 84.45 to 84.91. Now I've kept it unhighlighted as I thought to do so would make the action clearer rather than obscure the moves themselves. Now so far today, a gapping higher open since filled in. It was also an attempted break higher out of the rising wedge pattern, though seemingly with some effect. Further up we have the congestion from late May and early June that formed the recent bearish halfway hesitation, and that's between 85 even to 85 and a quarter. US dollar against the Japanese yen. High yet still indecisive spinning top on Friday after the previous session's butterfly doji pattern. However, it could also be seen as a key reversal up, though I don't think you need any such pattern to affirm the recent bullish incentive seen here. It was the highest high and highest close since December 1986. The base of the action was on the congestion zone, consisting of the May 1990 high at 159.61, the May this year high at 160.04, and the April 1990 high at 160.34. Just for guidance, we have a lot of gaps up here from back between April 1990 and the December 1986 high at 163.36. The further up we have the dark blue dark blue highlighted middle time, currently at 161.79 of the recent March to May bullish shift pitch hawk, and above that is the purple highlighted middle time, currently at 162.42 of the older February 2022 to January 2023 move. So far today, well, a higher open and an attempt both ways, though still within Friday's range. US dollar against the CNH, the offshore Chinese yuan. An indecisive spinning top on Friday, however, could also be seen as a bearish double and a key reversal down. The long suspected rise in this market is finally happening, though remarkably slowly, but it's still building the beginnings of a June-based bull channel, currently 728.61 to 731.87. Down below we have the previously mentioned congestion zone between 724 even to 727, within which sits the rising short medium moving average, currently 725.56, and a dark blue highlighted upper trendline extension to the January to April ascending triangle, and that's currently at 724.17. And now we have the rising medium moving average, currently at 724.19. Now looking topside, well, the next topside resistance of note is the mid-November 2023 high at 731.06. which ties in with some earlier congestion in the 731 even area. Now, so far today, a lower open and a small action that is still well within Friday's range. US dollar against the Mexican peso. On Friday, a combined bearish army, bearish double, and also an outside day. The downside was supported by the steep dark blue highlighted middle time, currently at 1821.10 of the early April to mid-May bullish Andrews pitch hawk, while above we have the capping action, at least on the closing basis, of the February 2020 low at 1851.71, which aided the capping action back in early June. I'd like to put once more the following idea in front of you of the possibility of the action from 2022 to date as potentially a huge double bottom pattern idea. We're now, after the rise during May, now into June, even after the recent falls, relatively close to the neckline area in the big scheme of things of around the February 2020 low at 1851.71. As is something I saw on my monthly charts, I would appreciate at the very least the monthly closes, and that's consecutive monthly closes over this level to confirm such a long-term potential move higher. Now, prices came close to doing this in June, but failed to make that significant high close. Thus, it will be interesting to see what July may bring. So far today, a lower open, but the influence of the dark blue middle time below has already affected the market for small move higher, though still within Friday's range.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.